Alright everyone, Cowboy Trades here, back with a super quick update on Bitcoin. We made a TA video for this 4 days ago that was 13 minutes long, and price action hasn't changed too much, so I'm going to make this one very quick. Number one thing is I am of course still in my trade from 16,500. I want to highlight a few things going on at this moment in time. So you can see in the immediate short term for the past 2 days or so, price action has pinged up to our first short term moving average, the 21 EMA, and you can also see this area correlates to a big old cluster of liquidity at this area between 16,700 all the way up to about 16,850. So it looks like we've pushed up a tiny bit, grabbed liquidity, came crashing into the EMA ribbons, and then if we do come over to the 4-hour time frame, you can see it looks like the 4-hourly EMA ribbons are extremely tight at this moment in time, and it looks like we've got something playing out like a BART pattern. If we come over to the 1-hour time frame, yeah, this looks a lot cleaner on the 1-hour time frame. You can see this beautiful spiky top, and then it looks like we're going to start rushing back down to the floor of approximately 16,500, which is of course where we entered our trade in the previous video on a 5x leverage. So what's interesting about this is if we do come down and fulfill this BART pattern, you can also see here on the daily time frame, these BART patterns play out so beautifully. They happen all the time. You can see BART pattern right here, you know, fake out deviation, come all the way back down. These BART patterns play out very frequently. One of my favorite patterns. So what's interesting about this is, like I said, if we do come down to this price target 16,500, we're once again going to be falling to the downside of this bearish pennant, bear flag, depending on how you draw it. If you draw it like this, bearish pennant. If you draw it like this, you could say that this is a bear flag. Either way, both are valid, but the number one thing we're looking at is not necessarily what's going on the top right now, although if you are drawing this as a bearish pennant, you can see we did once again come crushing into the top of this pattern. So every single time we seem to do this, apart from, you know, if we're barring this deviation, every time that we come into contact with this, we're pushed down, pushed down, pushed down, pushed down, pushed down, EMA ribbons fall down further, price action falls down further, and we're getting very weak every time we come up to this liquidity level. You can see previously we held liquidity as support and had a major move to the upside. In this instance, we keep on pushing up to this liquidity area, making lower lows and lower highs. And now it looks like we're going to be flipping this VPVR zone, or not VPVR. This is a fixed volume profile area. It looks like we're going to be flipping this fixed volume profile area as resistance as we do fall to the downside. Now, this can take a little while. I do think this is going to play out relatively quickly. However, you know, we do have about another 8 to 9 days potentially for this to play out. The apex of this triangle is coming into fruition on the 12th of January. However, I think this will be coming a lot quicker, mainly because we have FOMC minutes taking place tomorrow at 7 p.m. GMT time. This is the first FOMC minute meeting of 2023, and I do believe that they are going to be strongly hammering down that there is some more ways to go, there needs to be more tightening to go, and of course this will cause more economic pain. I believe they'll discuss all of this and more in the minutes. If you didn't know, you know, FOMC is where they make their decision. FOMC minutes typically happen, you know, 2, 3, 4 weeks before FOMC decisions. And they talk about why they did what they did in the previous FOMC meeting and what they see taking place in the next FOMC meeting. Of course, we haven't had an FOMC meeting in 2023, and this is the first FOMC minute. So this one is going to be very important for the market. And if we do come over to the S&P 500, you can see earlier on, the market opened, we broke down, pinged back up, and it looked like, you know, we've pushed up as much as I think we can before the minutes, and we are pushing back down to the downside. I'll talk more about the E-mini futures in just 1 second, but the main reason why I think we're going to start breaking down potentially tomorrow is because of the FOMC minutes. Now, if we do come over to the oscillators for Bitcoin very quickly, on the weekly time frame, you can see squeeze momentum indicators started to turn down. Money flow index has once again run into resistance, and this beautifully came up to 50, which is the heart line, ping, boom, starting to head back down to the downside. We talked about in our most recent video how the stochastic RSI is starting to flip bearish for that final capitulation back down. This is all in the weekly time frame, and this is relatively, well, this is calling for another macro break to the downside. This isn't calling for another, you know, breakdown, which is going to be over in a few days or so. This is calling for a meltdown, which is probably going to take place for, you know, a month or so, maybe longer. So when we are coming over to some of our lower time frame indicators, you can see Very similar situation happening over on the MFI. However, we are even weaker right now. We didn't actually quite make it up to the heart line, but we hit the heart line in terms of the MFI, you know, looking at the relative strength and liquidity in the market, and now we're starting to head back down to the downside. Stochastic RSI is heading up, even though price action is relatively struggling. So, you know, the stochastic RSI moves up very, very quickly. So if price keeps on lollygagging until tomorrow, stochastic is only going to push up further, become more overextended. And if price isn't moving at all, you know, even hypothetically, if we push up to, you know, 16,700, 16,800, in my opinion, because we're so stagnant, this is going to push the stochastic RSI all the way up, getting ready for a next major breakdown to the downside. Now, the only thing that looks even remotely bullish, and I can't even really say this is bullish, is the squeeze momentum indicator is obviously in bearish territory. It's in red/dark red at this moment in time. I think this is going to be coming back up to the heart line for the next day or so. I don't think anything major is going to happen in 24 hours. I think after 24 hours, we're going to start seeing another huge bearish, it was a huge slaughter fest take place. Now, total cryptocurrency market cap, we also came up to the EMA ribbon, short-term moving average, 21 EMA for the total cryptocurrency market cap, and the chart just does not look good right now. It looks like we're getting ready for that next major meltdown. You can pretty much see every single time we come into contact with these EMA ribbons, you know, we're doing it from a lower and lower level ever since these flipped bearish on the 8th of November. So these have got a pretty good track record. Coming over to the total altcoin market cap, I think altcoins are getting ready to get hit a lot harder, and you can also see a very similar situation playing out where every single time, you know, this was all the way up here and we just flipped bearish afterwards. But with the total altcoin market cap, it looks like it's getting ready for a brutal meltdown to the downside. So that's pretty much all I wanted to talk about. I do also want to let you know that outside of the Bitcoin charts, I'll make a separate video about what's happening with the S&P 500. But if we look at the E-mini futures for the S&P 500, like I've been saying, we are currently we're consolidating within this potential diamond bottom formation, and I said in my previous video, this is just the name of the pattern. I don't believe we have the liquidity to have a successful break up to the upside. This was only on the 4-hour time frame. We've also previously talked about how on the channel, if the line of attack is a little bit too steep, we can have a throwback to the upside and then create a larger type of diamond bottom. So this is exactly what I think we're doing now. I think we're probably going to lollygag, potentially have a tiny bounce. FOMC minutes are going to come out, and this is going to plummet the E-mini futures down. This is going to break down the S&P 500. This is going to break down the NASDAQ. This is going to strengthen the dollar. This is going to strengthen government bonds. And with this is going to bring back down Bitcoin and also bring back down the altcoin market. I think we're very close to having that final meltdown like we had in 2018. And I have just posted an on-chain metrics update looking at a few on-chain metrics which kind of show, you know, similar situations, for example, with the NVT ratio. When this spiked back in the 13th of November 2018, this didn't mark the top, but it did mark the final capitulation. NVT ran back down to the downside, and with this spike in the NVT, of course, the Bitcoin price went down for its final low. So there's a lot of things that I'll be looking at today as well. You know, the on-chain metrics. I'll also post my thoughts on the FOMC minutes. I'll also post an S&P 500 video, and of course this video as well. So just wanted to get a few thoughts out there, but Bitcoin does not look good at this moment in time. I think in the next day, maybe the next 2 days or so, we're going to get ready to start breaking down, and this trade that we've got on Bitcoin, 5x leverage from 16,500, is going to start becoming extremely profitable. That's all I've got for this video. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. It's been your boy Cowboy Trades. I'm out. Peace.